Yo, what's up, YouTube? This is your boy, Mr. Tennessee, and warm welcome to y'all to our first Forex Mastery Program 101. All right, and this is where we teach you how to trade Forex profitably. So, if you're not subscribed yet, consider subscribing, hit the like button, and share your thoughts in the comments. All right, so in this video, you'll be we'll be introducing what Forex is, what Forex trading is, and why you should consider trading Forex either as a side hustle or as a full-time career. All right, so let's delve right into the video, guys. Yeah, so welcome again to the Forex Mastery Program 101. As I said earlier, this is an introduction to Forex trading. What is Forex trading? All right, so what is Forex trading is the first question that might come to your mind. What Forex trading actually is. So Forex trading, to start with, is a combination of two words, a contraction of two words. One is foreign and another is exchange. So it's a contraction of foreign exchange, all right? FOR for foreign and EX for exchange. So on the surface level, Forex is foreign exchange. So what Forex is, what actually is this thing called Forex? So Forex trading is the buying and selling of global currencies. It's how individuals, businesses, central banks, and governments pay for goods and services in other economies. All right. Whenever you buy a product in another currency or exchange cash to go on holiday or whatever, you're actually trading Forex. So what this means is um, exchanging one currency against another in whatsoever um, transaction. Any transaction that you do, that you exchange one currency against another, selling one currency, buying another, you are actually trading Forex. So in our local settings, there are people or places we actually go to normally buy or sell the dollar against our local currencies, physical locations that we know, and people that we go to. We have a dollar, we want to probably change the dollar to naira or leons or whatsoever currency. All right, we know those physical locations we can go to get it done. So that's Forex. But this one we are trading here is done on a global scale. So there is no physical location that you can go to. It's a digital location. It's called over the counter because it's done digitally. It's not a physical location that you can go to buy or sell a particular currency. So we do it globally, digitally, with world dominant currencies. All right, like the dollar, for example, the euro, the pounds, etc. So that's what forex trading is. So why should you consider trading forex? Why should you trade forex? All right. Number one reason is forex trading, like any other business, you need a startup. You need a startup capital. But with forex trading, you just need a minimal amount of startup capital as an investment. All right. When you've learned the dynamics of the markets, you've learned a strategy, you know, at least you can say you're consistently profitable to some point. But you just need a minimal startup capital that you can um, capitalize on the markets to grow. All right, so with as little as $200, that can be referred to as a good startup capital to get trading done, to start your journey in the forex market. All right, and number two is minimum time commitment. Just like any other business, you need to get your time into the business for the business to grow. Some businesses will require your 24 hours time input. For example, your 9 to 5, you need to wake up 9 o'clock in the morning and go to work. whether in the office or your business place. So that will require your full-time commitment, your whole day to be concentrated on that particular job or business that you're doing. But with forex trading, 3 to 6 hours in a day is like more than enough to get your business running. And so that's just the time freedom that forex brings. All right, so you have the rest of the day to yourself to do whatever you like. So 3 to 6 hours maximum in a day is one reason why you can afford to trade forex. All right. Number three, you need no employee, no office, no inventory. All right. So, of course, for most businesses, once the business scales up, you need to have one or two people that you get to do one or two things for you, and of course, you need to give them incentives. But with forex trading, you need no employee at all. It's just you, 3 to 6 hours a day, just you with your laptop in your enclosed space. You can do your thing, trade the market, see your setups, buy or sell, make profits, or at least take the losses and move on to the next day. So it's that simple. No office needed. You can trade it from lying in your bed. You can trade it from your chair. You can trade forex from your dining. You can trade forex in your kitchen. So it doesn't require you to get any official space, all right, or any inventory. Don't need world-class laptop or a fancy office space. All right, you can with just your phone with a laptop. You can trade forex from anywhere, any location whatsoever. All right. Then number four is forex is recession proof. So what that means is with, for example, the stock markets, all right? Once the stock market goes down, when you're, let's say you're long on a particular stock, and you buy shares in a particular company, and once that particular company is going through recession, is going bankrupt, it's losing money from shares, your money is actually losing. There's no two ways about it. So once that even can even lead to the company closing, right? So with forex, you make money whether or not the price goes up or goes down. If the market is bullish, you make money. If the market is bearish, you make money. So forex trading is recession proof. You make money from both ways. Whether the market is going bullish, going up, or bearish, going down, you make money either ways. Number five, forex trading is a 24 hours market. It's 24 hours round the clock, 5 days a week. You can trade forex from any part of the world, any country in the world. You can trade forex and can build your business from anywhere in the world. Plan your daily activities, trading routine around your day job. So even if you want to take forex as a side hustle, you can plan your trading activities. Assuming you're in West African time, you're working 9 to 5, you can actually go to work in the morning, get back home in the evening, and still get to trade forex. So it's a 24 hours market, 5 days a week. Then, of course, you can generate consistent profits with forex trading. 5 to 20% a month is quite realistic to make monthly in the forex markets. It's not far-fetched. So it's whatever your capital size is, whatever your trading account is, you can conveniently make 5 to 20% monthly. Yeah, so what makes a successful forex trader? What what will get you from absolute beginner stage to a point that you can say you are successful in forex? One is you need to have a winning system or a winning strategy. All right. So to succeed in trading, you've got to have a proven strategy, a strategy that has been proven over time. All right, it's called a strategy that has been back tested, that has proven the test of time to be profitable. You've got to get a proven trading system that gives you an edge in the market, that makes you gives you wins more often than it gives you losses. It gives you losses. It's not actually the absence of losses, but guarantee that it's going to give you more wins than losses. And having a positive statistical expectation. That means for um, a number of trades, let's say for 10 trades that you take, statistically, you'll be expecting to win at least 6 trades. All right, so random, whether or not, no matter how the sequence of the winnings and the losses, but overall, statistically, you are expecting a positive expectation in results. It is a trading system strategy that stands to be right more times than you're wrong. So in when you have a trading system that is proven, it should give you an edge to make you right more often than you're wrong in the forex market. All right. So the second one is risk management. The first one is a trading system that you should get right, and the second is risk management. So for risk management, effective forex risk management allows forex traders to minimize their losses that occur as a result of exchange rate fluctuation, which is unavoidable, right? The market will react to what market brings, setups that market brings. So what the market does, you have no control over. So what you have control over is one, your system, and two, your risk management, what you're willing to risk on a particular trade at a particular time. All right, that you can control. Consequently, having a proper forex risk management plan in place can make you safer, more controlled, and less stressful in currency trading. What that means is, assuming I'm risking $10 in this trade, it can make me, I've resolved within myself that, okay, for this particular trade, in this $100 account, I am willing and ready to lose $10. So if the market goes against me, I know consciously that worst that will happen is I'll lose $10. So that's fine. I'm okay with that. If the market goes in my favor, I'll make more than $10. So that's there. So it keeps me in check. It keeps my psychology in check. It keeps my emotions in check because I've predetermined, I've managed my risk before even entering the trade. So I will not be, you know, my psychology will not be at play compared to the way I'll be if I'm going to lose all of that $100 on that particular trade. Nah, it will, it will, you know what I mean. Yes, so the fundamentals for risk management, all right? So forex risk management comprises of individual actions that allows traders to protect against the downside of a trade. The downside of the trade, if the trade goes against you, it gives you like a shield against losing what will cause you psychological stress or physical stress to some point. All right. So more risk means higher chances of a sizable returns. If you risk more and the trade goes in your favor, you gain more eventually, actually, but also a greater chances of significant loss. We need to get that clear, right? So if you're risking more, it's potentially going to give you a huge return if the market goes in your favor. But if it goes against you, it gives to a significant loss as well. Right? Therefore, being able to manage the level of risk to minimize your loss while maximizing your gains is a key skill for any trader to have. To revolve around minimizing your loss, keeping your loss as minimal as possible, but with the potential to maximize your profits over time. is one skill that is top notch, one most underrated skill, and every trader should have that within grasp. So the fundamentals for risk management is number one, your risk appetite, what you are willing to lose in a particular trade at that particular time. Assuming, okay, it can be measured monetarily or in percentage wise, right? For example, if I'm having a $1,000 account, I can measure my risk appetite in percentage to say for every trade, I can afford to lose, let's say 5% of that account. 5% of $1,000, that's like $50, right? So measuring my risk appetite percentage wise is I can afford to lose 5% of that account. So for me to blow that account, I need to lose like 20 trades in a row for me to lose all of that money, which is like almost impossible to win, to lose 20 consecutive trades in a row. It's almost impossible. So once you have risk management in place, you know your risk appetite, what you're willing to risk and lose in a particular trade, that keeps you in check. So it will, balance your psychology and make you be in a good mood for trading. All right. So then the second one is position sizing. Position sizing is basically lot sizes. Um, yeah, so what is position sizing? Position sizing refers to the amount, the contract size of a particular currency pair or any instrument whatsoever you're going to buy in that particular time. All right. So that is measured with regards to that is measured based on your risk appetite. So once you determine your risk appetite, then your position sizing, the contract size of a particular instrument you are trading can be measured. Yes, so measuring your contract size, don't worry, it will eventually make sense to you, all right, in subsequent videos. Yeah, so your contract size with respect to your risk appetite, your risk tolerance gives you determines how you calculate your position sizing. And another fundamental of risk management is stop loss. Your will stop loss and leverage, those will deal with in future videos. All right, we'll deal with them in subsequent videos, so don't worry. Number three is trading psychology. So the third point is you have to have a good trading psychology in check. All right. Yes, so trading psychology refers to the emotional and mental states, your emotional and mental state that helps dictate success or failure in trading securities, in trading currencies, in trading assets, in trading any tradable instruments. Right? So trading psychology represents various aspects of an individual's character and behavior that influence that trading action and can be as important as other attributes such as your knowledge, your experience, and your skills in determining trading success. So your trading psychology is the least paid attention to in these three factors that determine success in forex, but it eventually turns out to be the most important. All right, the most underrated, but the of utmost importance. So your trading psychology is important and determines your trading success the most. Yeah, your emotional state when in a trade and even outside a trade, your emotional mental state determines success. It's as important as your trading skills. In fact, more important than your knowledge, your experience, and your trading skills in the forex market. So, key notes to consider on trading psychology. Trading psychology is the emotional component of an investor's decision-making process, right? Which may help explain why some decisions appear more rational than others. So it's the key component of your decision making. Looking at a setup, what what would you say is your bias? How would you enter the trade? What would be your position sizing? What would be um your risk appetite for that particular trade? Every decision you make on that particular trade, before making the trade, after making the before making the trade, when you are in the trade, and after making the trade, all those are very paramount in your success as a forex trader. The second is trading psychology is characterized primarily by the influence of both greed and fear. So there are two factors that um, are very much crucial in your journey as a forex trader, and as a beginner, you need to get this in check. You need to get this at the back of your mind that they are the two, and it's like a war against yourself. The greed is yours, your greed. The fear is yours. So it's like fighting a war within yourself. All right. So greed to make more, the greed to make more, the fear not to lose anything. So it's a constant war in the forex market that even professionals face a lot. But it's just that professionals have combated as a dynamics around it, how they deal with it. But it's a hard thing to come to defeat. Greed drives decisions that might be too risky. Greed drives decisions that will make you want to get more, and eventually losing more. That's greed. And fear drives the decision that might avoid risk and generate little returns. Fear might deter you from taking a potential position that might give you a profit, huge amount of money, but you can be fearful not to enter that position. So knowing how to strike the balance between greed and fear is a whole lot a whole lot to deal with, all right? Because professionals, hedge fund managers as well struggle with that. It's impossible to 100% overcome that, but you just got to suppress it. You need to build a system around managing greed and fear, hence trading psychology. All right. Behavioral finance has documented several psychological biases and errors involved when making trading decisions and investments. All right. What makes a successful trader? Winning system, risk management, and psychology, as we said earlier. Your winning system determines 10% of your success as a forex trader, just 10%. Your risk management determines 30% of your success as a forex trader, and your psychology, your greed, and your fear guarantees 60% of your success as a forex trader. So you might have 100% in winning system. You might have a system that is working perfectly correct, but that's just 10% of what makes a forex trader. You might have your risk management in check, but that's just 30%. So even if you have a winning system and a risk management system in place 100%, that just guarantees like you're just there 40%. So without your psychology in check, you're still going to be a struggling trader. So assuming you just have your psychology in itself, you are 60% up. So having 60% up, half of this and half of this, yeah, profitable. Yeah. So we need to be conscious of these ones as we delve more deeper into our course on Forex trading. So that'll be all for today, and thank you for sticking around. So in our subsequent lessons of this professional trading course, we'll be dealing with, of course, the introduction of Forex trading, the rise of Forex, what is traded in Forex markets, the basic Forex terminologies, trading times and trading sessions, forms of analysis, currency pairs, what are traded in the Forex market, and when to buy and when to sell, the concept of pips and pipettes, concept of bid and asked prices, spread, take profit and stop losses. We talked about stop loss earlier. All right. Then lot sizing. We talked about lot size and position sizing as well. We talked about it earlier. We'll delve more deeper into it as we go on. Leverage as well. Trading orders, candlestick anatomy, candlestick patterns, chart patterns, trend channels, support and resistance, trading view platform, the trading view trading platform, charting platform, sorry, MetaTrader platform, Fibonacci. Then we'll look at a few strategies that will be introducing: the break and retest, third bound strategy, the breakout strategy, then trading psychology. We're going to be delving into trading psychology, the 60% that guarantees your success as a Forex trader, then trading plan and trading journal. All right, so thank you for sticking around. It's a pleasure to have you here. If you've not subscribed yet, consider subscribing and share this video to someone that might need it. And like and what you think about this video, and let me know in the comments. All right, share your thoughts in the comments. And again, don't forget to subscribe. I love you guys. Peace out.